Welcome back. Earlier today, it was reported private payrolls increased by 103,000 in November. That's said by ADP. That's below expectations. This follows the rather weak JOLT survey we spoke about the other day, and it comes right up to the non-farm payrolls we're expecting in another couple days. CNBC.com reports private payrolls grew by 103,000 workers in November, below the revised 106,000 October and 128,000. That was a Dow Jones estimate. It was a disappointment. It's a second disappointing jobs number. And we're going to see why that might be so significant. This is the change overall in non-farm payrolls. Blue histogram bar shows us 103,000. And then we break down this report into different sectors. Trade, transportation, utilities up 55,000. This is the increase in jobs. 11,000 is for employment in financial activities, education, healthcare services up 44,000, losing 15,000 in manufacturing as well. The rest of the sectors, including natural resources, construction, business services, information, and leisure hospitality, very close to unchanged. Now, this is what the total non-farm payroll looks like going back a couple years from November 21 through present day. Now, today's number again is 103,000, which, well, it might sound like a big number, but historically we can see this is actually one of the worst numbers we've seen since going back to, again, November of 2021, and probably a lot further back than that. This is certainly not encouraging news, to say the least. Now we can compare the different subsectors of the ADP report. The yellow line is the S&P 500. The red line in this case is the natural sources and mining. This is on a year-over-year basis. So you can see right now we're up about 20% on a year-over-year basis. Pretty interesting how there seems to be a strong correlation at this point. As stocks go up, so do natural resources and mining. Maybe there's no accident as gold is testing very significant highs lately. Silver not too far off significant highs either. Interesting to see. Now we've ranked these charts from strongest to weakest. So this looks like the strongest chart historically. We take a look at construction also on a year-over-year basis. Pretty strong recovery. ADP jobs moved to the upside, as did stocks, surprisingly, despite high interest rates. Here's trade, transportation, utilities. Notice in this case now, that line has not recovered with the stock market back to the upside. And again, the reason why we talk about the individual subsectors of these different reports is because they speak directly to our, perhaps our investments. We look at our individual stocks, we say, okay, we have, a significant amount of historically growth in the construction sector, not so much in trade transportation. Maybe that translates into long-term stock trends. Here's education and health services continues to make lower lows since July of 22. The beginning of the inverted bond market certainly has not treated this sector very well. Here's employment in financial activities. The financial sector is one of the weakest sectors by far, not only in the ADP report, but in the overall economy. Take a look at information, data services, also very close to very significant lows. This speaks a lot to computer programmers, for example, in data services. We see here leisure hospitality, including hotels, resorts, and things of that nature. Turning back to the downside, very close to very significant lows we achieved early January. Here's manufacturing. Now, we recently had some quite good news in the manufacturing sector in the past week or so, but the ADP report shows us private payrolls certainly do not reflect that positivity. Ideally, when we look at a sector, we want to see all areas of that sector look strong, including private payrolls, which today certainly does not look like the case, especially manufacturing and also durable goods, which we spoke about the other day. Professional and business services, also one of the weakest and continues to make lower lows over time. Given that the U.S. economy is very much a service-driven economy, this is some cause for concern. Here's a total non-farm payroll, private payroll. This is the overall number, and this is probably the worst chart we've seen out of all of them, achieving new lows, only about a 2% year-over-year growth at this point. Now, here the white dotted line is the S&P 500. This is also measured on a year-over-year basis. And the other standouts, we didn't want to, obviously clutter the chart too much, but highlight the real standouts. So over time, we can see the year over year growth has been the best in natural resources and mining. That's the green line at the top, near 20% year over year growth. The S&P 500 is a white dotted line. Just below that, the red line, leisure and hospitality, which we know historically that chart actually does not look good at all. But surprisingly, it's actually historically going back about a year or so, this is one of the better charts. The yellow line is construction as well. So the takeaway from this is that this is the second employment related report we've seen in the past, so many days. We just had the JOLT survey that was released that really those numbers did not look good at all. The ADP private payrolls, 103,000. It's one of the worst months we've seen in quite a long time. And we're coming up to the Friday non-farm payroll number. Now we know the Federal Reserve has essentially taken all interest rate hikes off the table, and the Fed funds futures are forecasting a possible rate cut as soon as March. A lot of this hinges on the strength or lack thereof in the US economy. And so far, I would say that the job sector of the economy has been lackluster at best. A lot of economists will say they don't see any problem with it. I disagree. I think it's one of the weaker parts of the economy is the job sector. But depending on what this number looks like on Friday could certainly move the futures market and the expectation for a Fed cut sooner than expected or possibly later. So stay tuned to that. That should be a very big number. We hope this has been helpful. We look forward to seeing you back soon.